Hello everyone, and thanks for tuning in for another market outlook by Exness. My name is Andres Nucleus, trading specialist here at Exness, and in today's video we're going to be checking on a possible trading idea for the week ahead, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of last week's idea. So the idea was for a buy on USD Canadian Loonie with a target around 1.42 or higher. The price is trading around 1.417 and has the potential to reach the target in full in the following days. Now for this week, we are looking at Pound USD pair for a potential buy trade with a target of around 1.29 or higher if the price manages to cross 128. The price has found sufficient support on the lower band of the Bollinger Bands and is currently testing the support of the 23.6% of the daily Fibonacci retracement level. The stochastic oscillator is in the extreme overbought levels, but this is because of the recent bullish correction after a 2-month period of bearish momentum. So that is not very accurate to rely on for a continuation of the previous bearish trend. The area of 128 might be a strong resistance on the price since it's the combination of the 50-day moving average and the upper band of the Bollinger Bands, but if the price manages to cross above this area, then the target of 129 might be a realistic one. The primary narrative in focus is the pressure on the dollar and support on the pairs traded against it. If we take a look at the 10-year Treasury bond yields, we will see that the rates have declined in the past couple of weeks, meaning that capital flows in favor of the dollar are declining, creating losses on the greenback. This is also seen on the dollar index chart, where after a rather aggressive bullish momentum since early October, it has corrected in the past couple of weeks, again supporting the narrative of the dollar facing some minor turmoil. Also, inflation in the States has been stable for the past 4 months, as well as the Fed is expected to proceed with another step cut in the meeting on the 18th of December, putting more pressure on the dollar and supporting this week's buying narrative. American inflation data and European Central Bank's interest rate decision, as well as the British GDP data on Friday, is what investors and traders are paying attention to for this week. So in summary, the trading idea for this week is a buy on GBPUSD with a potential target of around 1.29 or higher if the price manages to cross 1.28. The main narrative is the pressure on the dollar by the declining bond yields, stable inflation data, and expectations of a rate cut by the Fed. The economic data that investors need to pay attention to are the American inflation data, the European Central Bank interest rate decision, and the British GDP data. Remember, this is not a signal, it is just an idea for a trade. It's not a guarantee of success. Always do your own research and remember to manage risks.